Ian Lowe joining us from Dacxi. Ian, good to talk to you again. I hope you heard those comments there from Senator Andrew Bragg. Interested just to see where Australia is at the moment. And he's saying that Australia is an undeveloped, well, has an undeveloped crypto framework. I guess particularly talking about a lack of licensed market there and also regulations.
Yeah, that's right. So look, this is a really positive development, this review, and government and industry really deserve some credit for getting this review moving. I guess the first thing is it's a very broad assessment of the opportunity for blockchain more generally, and what are the impediments to innovation using blockchain technology. So the crypto implications of that, cryptocurrency implications of that, is really a subset of the broader review, and it's gone through a number of iterations, and we're now getting to the pointier end of some of those considerations. But I think the voice of industry as it relates to blockchain and specifically crypto is a very singular and clear position, which is that the government wants to be pro-innovation, and innovation requires ideas being conceptualized and commercialized at speed before anyone else does. By definition, that is innovation. So the idea that we are behind is a really important observation. We absolutely are. There are other markets that are in a far better position, very clear rules of engagement for those that operate in the blockchain and the cryptocurrency ecosystems. And we're yet to have that clarity here in Australia. So some very simple examples. If you operate any kind of blockchain-enabled business, and it doesn't need to necessarily just be a technology business, it might just be a consulting business. The major banks in Australia will by default refuse to give you an account. So if you're running a business and you can't get banking, how do you receive payments from customers? I mean, this is a very fundamental issue. Equally, standard business insurances, everything from IT liability, D&O, indemnity insurances, these are exceedingly difficult to secure if you operate in any kind of blockchain-related, blockchain-enabled or technology-related, blockchain technology-related business. That's a big problem. So I think one of the things that industry is saying is, as a starting point, we must have a level playing field. And I think Blockchain Australia has done a very good job of taking that position forward. A number of organisations have made individual submissions to the same effect. So a level playing field is the starting point. And then in terms of opening the way to innovation, that's really about investment. And investment will respond to improved certainty. And so the regulatory frameworks are really, really, really important. And so catching up to some of the other markets like Singapore and others, UK, a whole bunch of other markets around the world who are further down this path is really critical. We can't on one hand say we want to be an innovative leader in this space, we see opportunity, and at the same time not move towards those regulatory frameworks more rapidly. The velocity is key.
Yeah, and obviously the government can't be ad hoc in the way they approach this. Therefore, it's going to take time, isn't it? As you say, we're way behind the pack at this point. But clearly they want to take a look at those other examples, particularly as you mentioned, such as Singapore and what they're doing. Take, I guess, what's working and what's not and sort that through.
Yeah, that's right. And look, the starting point is really good. Australia is a highly regulated market. Our regulatory frameworks are by and large, good, and good by international standards. They're certainly not perfect, and none are, but they're good. So we've got a starting position. I don't think anyone is suggesting we go away and we completely rewrite, a whole series of regulatory requirements specific to this new digital asset class called cryptocurrency and tokens, etc. Really what we need to do is adapt and refine what we've already got to make sure that it understands and caters for this new digital revolution. And I mean, a simple example of that is that, a security is a highly regulated financial instrument, and a cryptocurrency is not considered a security. So some of these definitional type issues need to be resolved. I think they can be. I think they will be. And the regulatory frameworks we have in place really just need to be adapted and refined.
All right, let's get a little more specific just as what's happening as far as investors are concerned at the moment. Particularly, let's start with Ethereum. Now, the London hard fork has just activated. I know you explained what a hard fork was last week. Just for those that didn't see that, explain what that is again. And essentially, they've got to give it a name. They tend to be giving it city names, don't they, at this point?
Yeah, it seems to be the way. But look, essentially all this means is there is a major technology upgrade to the Ethereum network. And so this is something, we've been talking about for a little while. Blockchain technology in its current form is really sort of version 1.0 or 1.1. This upgrade is really significant for Ethereum. It moves them from sort of 1.1 and fast tracks them towards 2.0. And it does that in a couple of ways. Firstly, it increases the capacity of their blockchain. So it essentially doubles the size of each block. And the knock-on effect of that is it makes transactions faster, which has been one of the criticisms of blockchain. It will make transactions faster, and it will also make the cost of those transactions more predictable. It will also make future upgrades easier on the Ethereum network. And it really lays the groundwork for a transition from the verification model in place at the moment called proof of work to a new model called proof of stake. And without getting into the hairy detail of what that consists of technically, it will achieve a couple of things, mainly around efficiency, user experience, etc. But it will actually significantly reduce the Ethereum network's reliance on data miners. And so in turn, that will significantly change the profile of energy consumption associated with the Ethereum blockchain. So what's interesting is that the transition deadline, where essentially everything moves over to this upgraded version of Ethereum, which was originally scheduled for the end of next year, is now going to be the end of this year. Like any structural upgrade with technology, there are some risks, but they've worked hard to understand those risks and iron out the bugs.
Yep.
And don't forget, a lot of crypto coins are built on the Ethereum blockchain. So they are really a technology infrastructure provider in the cryptocurrency world. And not surprisingly, both leading up to this release and immediately following the release, their prices strengthened. Mid to late July, they were trading around $1,700 and now they're trading at around 2,800. So about a 60% increase in 3 weeks.
Well, in fact, let's just take a look at some of those prices there. As you mentioned, Ethereum sitting around 2,800 US at the moment. Bitcoin over the past 7 days, actually, that was on a downward trend. Just in the past 24 to 48 hours, it has come back. But obviously, Ethereum is the one that has really outperformed. It's up around 14.5% over the past 7 days. What else is driving the market at the moment?
Well, look, not all, but most of the majors move somewhat in step with each other. There are some exceptions to that, but they move somewhat in step. So Bitcoin continues to be a really good barometer for sentiment around cryptocurrencies generally. Look, like Ethereum, it had a price low point over the last few months of mid-July at around the $30,000 US dollar mark. Since then, trading has fluctuated between the $30,000 and $40,000 range. So we've been in this $30,000 to $40,000 channel for a few weeks now. And really what's created that channel is, institutional traders have created positions that have sort of bottoming at 30 and a ceiling at 40. Since then, there's been a number of things which have, I think, marginally tipped the market to become more bullish. There was the B Word virtual conference that we spoke about last time. Amazon have recently advertised for a global blockchain lead. So there's been all sorts of speculation about what that means for their plans with blockchain, and certainly all sorts of exciting possibilities for what they could achieve, enabling blockchain in their business. PayPal have recently, they've got over 100 advertised positions in crypto-related roles, and they activated their crypto payment solution earlier this year. We talked about, Visa, the first Australian-issued Visa debit card, which is underwritten by crypto, and the chair of the SEC has come out and made public statements about the need to regulate the cryptocurrency market generally, and then this hard fork we've just spoken about. So as we look at the ownership base of crypto, it's accelerating. Some interesting numbers on this. Crypto.com have released some numbers recently, and between January and June of this year, the ownership base for crypto increased from 106 million to 220 million. The preceding increase from 65 million to 100 million took 9 months, and now we've doubled over 100 million in a 6-month period. So it's not just increasing, it's accelerating, and utility for crypto is building rapidly. And so those two things in combination, along with some of the other things I mentioned, are going to continue to support the price over the long term.
Ian, always good to get your analysis. Thanks for joining us from Dacxi.
Thanks for having me.